Hi, it's Monday, the 20th of December 2021, and we're taking a look at the trade of the week this week, and it's gold. XAU USD is the mnemonic for it, gold against the dollar. We'll start with the higher timeframes, then break it down into the smaller timeframes to give full color on the technical analysis, reasoning, and levels behind the trade of the week. So if we look at the weekly chart, we can see that we've had an impulsive move higher and we're seeing a correction, and we're in a corrective channel lower, and price action has been pretty sideways for the last 2 or 3 weeks. We'll break it down on smaller time frames to give you the levels on there, but on the longer term, medium term outlook, we can see that $1,677 is quite a pivotal level moving forward. We had price action broke up above here in early 2020. The pandemic hit, we had a big sell-off down to 14.45. The reaction higher, once prices have captured ground above the $1,700 level, we've only revisited on 4 or 5 occasions, and that's been down to 1677. So that's the key long-term technical support level that we have. As this is a corrective channel, we're looking at a bullish flag overall. So on the longer term chart, we still remain bullish for higher levels in 2022 and 2023. And but at the moment, we're in this corrective move lower, and we can see that this has an extended move looking at upwards of $2,500 over the next couple of years. So daily chart, what's that showing us? We had this support line that we can pick up on, the horizontal support at 1677. The trend support has broken, and we can now actually redraw this line. We had a couple of points or one touch. We can call this one touch here, 2 touch, 3 touches, broken below. So it's almost negated that trend line. If we are to redraw it, we could probably redraw it to around about here, even take out the low from the 15th of December, which was a move down to 1754. On that day, we posted a bullish hammer. Now that is a very bullish candle, positive candle, and price action from there reversed higher quite sharply up to 1815. Now we saw the opposite of a bullish hammer, and that is a shooting star candle that formed on Friday, and we've seen price action to and froing on the Monday at the start of the week, trading around about the $1,800 level. So for us, resistance comes in at 1814 to 1815. Above that, we have a more serious level of resistance coming in at 1834, and above that, the swing high from 16th of November was 1877. That would be final resistance before we look to attack the 1917 level. On the downside, we can see support will be coming in on this trend line between 1755 to 1758. A break of there would look to target support at 1722 before the real solid horizontal support line that we've got coming in at 1677. Let's have a quick look at the 4-hour chart. On the short-term time frame, bullish outside candle from the 15th, and that was the Wednesday. That was the Fed meeting. We saw price action trend strongly higher and has corrected. So nice impulsive move higher and correction on the 4-hour chart. Really has to take out the 1815 level to open up the upside. On the short term, the hourly chart, we are seeing somewhat of a corrective formation. We could almost liken this to a typical head and shoulders formation, which will give us a neckline around about that 1795 to 1800 level. So for us, it's while we're above this 1795 support, still looking for higher price action. The Ichimoku cloud offering good support here, but this head and shoulders formation is definitely something to be concerned about. Now, one thing that we could also look at on this side of things would be the news sentiment. News sentiment remains bearish overall. we're seeing a little bit of an uptick in the last 24 hours. But overall, we can see that we've seen both bullish and bearish indicators over the last month, but with news sentiment, the blue line indicating negative levels, we really do sort of favor the downside from a news sentiment perspective. Dollar, plenty going on the dollar. That will be driving gold also. We saw price action tick higher last week, potential for a double top in the dollar index, but has a neckline yet to break. So volatility there should add to the volatility in gold. And as we say, we expect a nice volatile week. Them levels to watch again are on the upside, 1815 resistance, 1795 on the downside. A break of either of those should lead to an extended move either way. Thanks very much for joining me. Hope it's been informative and look forward to seeing you again soon.